Hi everyone. Today is Monday, March the 24th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we begin by looking at the E-Mini S&P 500. What I'd like to peek at is the weekly chart and bring to mind what we are staring down. Now, as you might recall, in times past, I said, hey, listen, we fell into this area between, say, July of 2024 and September of 2024. We fell into an inventory accumulation space that was distributed a bit at a discount here on August 5th, and then began to accumulate again and has been in distribution for quite some time until it fell into another pocket of accumulation, and then we distributed back down to the old area of accumulation. We might just call this, in simpler terms, a retest of old resistance, new support. Now, because we're on a weekly time frame, and because we're looking at the 50 on the weekly, big money is really attempting to defend this area, and not necessarily big money, but longer time frames. All right. And so what we see this morning is a bounce off of those regions. Now, let's talk about the real levels of the intraday space. The backdrop of looking at the weekly bounce is because I suspect if folks are short in this area, they are going to drive the market to the north if they continue to try and short the top, because this is a bigger reflexive motion that I suspect takes us back above those critical moving averages in the charts, particularly the 50 and the 200. So, moving averages, 50 and the 200 moving average. So what did we see? We can see that this is our opening hour today. We've got a gap up, and let me put the low here. The range that we want to look at is 57.40 and 57.5625. Okay, so between 5,740 and 5,756, which is 16 points, that's the squishy space that's going to have the buyers and sellers maybe arguing a little bit more. If the buyers lose control of 57.40, we have the opening range of prior days at around 57.22 that becomes support. As we move to the north, which, remember, if we break above the 1 hour high, it tells us that we are likely to continue forward. The stop, 15, 16 points wide, depending on where you got in. But if you want to be a little bit more cautious, you could see the frame out, building new support in a tighter range near 57.50. So let me clone that and let that be the number we stare down today as upper support. So as long as we hold 57.51, price action is going to move to the north. And look at how much open space we have to the north in these charts. The last high liquidity area is 57.90. That's an important zone. We'll clone it, write it down. I'm going to clone this line. Potential target, 57.91. Now, if the shorts are really pressing and they get into trouble, it's going to be pretty ugly for them, because the next spot that they are going to come into, this is the opening range, way up here at 58.38. We have one more line in the sand prior to that, and that's this wick right here at 58.21. Okay, so that 58.21 could be a really good, solid, high level, but there is really nothing there except, oh, I don't want to do that, except stair steps up through this range. So my suspicion is that shorts are going to have a tough time, right? As we stair step up through this formation, it's going to be by the dip through the majority of the day. All right. We do have news coming up. PMI composite flash, that's going to be important. That's at 9:45 Eastern. Let's go to the NQ. NQ not as, what's the word? Not as strong as the ES, but it's still breaking out, right? It's all the way into the opening range formation of March the 6th, and it's now up over it. So the next line in the sand is where that liquidity sits at 20,287. Now there's a fair bit there. It could get really noisy, but if the shorts think that they are going to be able to take control of the market here, I really do not see anything like that in the near term. It really does look like buying pressure that could push it all the way up to 20,490. Remember, if the shorts get caught on the back foot, they are going to have to liquidate, and they're going to have to do it at a discount to them. The buyers going to be great. They're going to be liquidating at a premium up into their prior congestion zones, which look to be between 20,287 all the way up to 20,650. So that's a wide zone. Pullbacks are buy zones. If you are looking at the chart and you go, oh my gosh, this thing is running without me, collapse into a tighter time frame and say, all right, I'm buying the dip. Okay? And manage your risk. You'll be able to manage that. If per happenstance, in some strange twist of fate, this area at 20,287 becomes resistance, remember, walking through those areas that are the opening range formations of prior days will help you step back down into where the chart action is showing up. All right, let me add the opening range of that candlestick. Is that right? What's the low? 19,995. There we go, 19,995.50. It could be that it falls back into that space, but that candlestick is huge. The top of it is really at that 20,160 area, and so that's what we need to watch. Dips are buy zones. Could they be significant? Yes. What do you want to watch for? Advancers to decliners opening up very positive and then starting to leak. That's telling you that there's going to be a dip, potentially into those lower levels, potentially into the VWAP action, right? This big range right here is pretty important that we just ran right through it. We could easily come back into that low volume node area, or excuse me, high volume node area near 20,101. All right, taking a look at the YM. Here it is on the weekly. Everybody's doing the same thing. They're trying to bounce off of their 50 weekly simple moving average, which happens to correspond with old resistance and new support. They bought it up at the end of last week, price action held, and now they're trying to move further to the north. All right, so here we are. Take a look at the opening range of this current candlestick. Let's see if I've had this low correct. 512. Yes. This morning, I don't know why I don't have that. This morning's candlestick sitting right on top of that range. Maybe that's why I didn't do it. Low. 426. All right. So there's that range. Candlestick formation going up into frontline resistance. Listen, there are going to be sellers that try to show up right here at this area. You can see it in the ES, you can see it in the NQ, you can see it here in the Dow, but the pullbacks should be buy zones. So what do you want to do in terms of waiting for that? You know, my favorite thing to do is let's see if we can retest where the last buyers came in. And so in my mind, that number looks to be the congestion zone at 42,600. Happens to also be near the VWAP. If 42,600 holds, you've got price action to the north. Could you buy it there? Well, yeah, you could. The risk event, you'd want it to be, if we use the numbers, it's 50 points wide. So it might be better to let it head down, find a higher low, head up, and once it clears the 600, you have a new higher low as your support zone that you can take the trade into. But everybody's running into resistance right now. Pullbacks are buy zones. It's just a matter of where those pullbacks sit. And that is the rub, right? It's really got to be careful about where you want to position, because the dips, they could come in and fill the gap, right? This is the opening range from Friday, this area down here at 42,318, right? Very tight range, to be sure. So it could come into that zone. I would say be very careful. It's going to be a news-heavy week. And the 945 candlestick could give us a very nice trading opportunity if the price action dips and begins to hold. Let's take a look at micro Bitcoin. Look at how this chart, let's go to the weekly, right? This chart bounced off of the 50, clockwork action. Bounced right off the 50, filled the gap, and is now trying to recover above a downward sloping 5. Now, if you listen to Brian Shannon, he talks a lot about trusting a chart with a downward sloping 5. And if we look on the daily, we can see it's an upward sloping 5. But where is old support and congestion? It's right here. So where are the traders trying to head to? I think they're trying to head to 91,000. This area at 89,460, 89,700, that probably is where they're going to rush into. In terms of what they're trying to do, but notice the gap, right? The opening gap formation. This range is fairly gigantic, and there's no opening candle formations sitting in here. My thought, and I'm just going to borrow this line, my thought is that it moves into that heavy congestion somewhere around 88, 89, and 88, 89,000, and then we'll see what happens. But once again, dips are buy zones, so the pullbacks are going to be buying opportunities. They are. They're going to be buying opportunities. The question is, how big is the pullback? So 87,500, it's sitting right there. You could certainly try it, but your stop would need to be about 500 points wide. Not bad for a micro, but still a little significant. For me, I would like for it to come into the heavy congestion area near 86,700. That might potentially be the buying zone. I have no idea how hard the sellers are going to try and push the trade, or if everybody's just going to say, yep, it's a buying formation, and it's going to end up moving to the north. So far, if you're trading small size and you're looking at this, clearly pullbacks are buy zones. And it is pulling back right now, so might be a nice shot to take a look at that space near 87,500, and maybe you keep your stop a little tighter and you say, you know what, I'm going to make my stop 87,300, and you go for it there. Let's take a look at oil. Oil's on the rise, right? Let's go to a weekly chart. We can see from this formation, it's sitting right down here at the base of all of this congestion. They are attempting to try and get to that weekly candlestick 50, right? They want to very badly. But in weeks past, the bounces into this accumulation zone between $71.50 and $65.50 it's moved pretty sideways with a ton of congestion right at the $70 mark. So in my mind, that's going to be the region where we go, I want it to confirm above 70 for me to hold it to see if I can get into higher ranges. On the daily chart, what we can see is we have an upward 5, we have an upward VWAP, we're making higher lows and higher highs, so pullbacks, obviously buy zones, but we are sitting right at resistance. That's that 69 area. PMI might give this a bounce or it might give it a fade. My thought is if it gives it a fade, it's going to be a great buy zone. If it gives it a bounce, you're going to have to let it calibrate, because the last time we did have any bounces like that, it ran into the point of control at $70.27, and then it reversed. So as we take a look at the hourly formations, we can see how these opening ranges really have mattered in times past. We just pulled back and tested 68.70. We've got higher lows and higher highs. We are sitting in regions that the chart normally reverses. So wait for the dips to be buy zones. Let it come in to this value area high. I don't like chasing this long. It would be much better for me if it could come back into this area of compression at around 68, 68.50, and that would give me that buying opportunity. Notice, just want to show you, let's quickly head back here. You can see the traders trying to give up the top end of the range here as they reverse off of the wick. ES, NQ, all of them sellers at the prior resistance zone. But it's not a steep sell. And again, everything looks to be bullish on the pullback. Not a big breakout. Everything that is except gold. Now, you guys know last week I said, hey, listen, I think gold is ready for a rotation. Well, gold proved me wrong, because it made both a higher low and a higher high. So this candlestick here is essentially the do or die. This number at 3,019 going to be really pretty important. Let me change the color of this one so that we know it's not an opening tick formation. That 3,017 is going to be a zone where, as long as it holds it, gold's going to continue to rise. Now, you can see that it's actually sitting right under this floor of support. We are under a downward sloping 50. We are in the direction of an upward sloping 5. So who's going to win this? I have no idea, but I would contend that the sellers are going to win this, because I am thinking about downward rotation. Now, here's where I'm wrong. If it doesn't lose 3,031, I have no business being in the short. If it does lose it, but it begins to hold 3,024, I've got to get out of this short, okay? Because as long as I have increasing levels from underneath, it tells me buyers are forcing price action up, and easily this area could return to upside formations. We can see that from a daily perspective in terms of saying, well, wait a second, what just happened? Old resistance, new support, right? And that's what we're staring down. My suspicion is that we are going to head to old resistance, and that old resistance will give us the new support action. But I think that's all the way down at 29.50. Okay, let's go to SPY. Here we are on the daily. Very messy 5, simple moving average. Very messy VWAP. Underneath the 50, underneath the 200. What are the traders going to try and do? They're going to try and get it back above that 200 simple moving average. So the dips, very likely to be buy zones. Here's the problem. There's a gap sitting here, and so that gap might fill. It might. And if it does fill, the close of Friday at 565 going to be really important, right? So far, what we've done is, here's our 4 a.m. open. I'm going to use this line to put on the high of the 4 a.m. open. I don't know what this line is. Let me delete this one. Oh, liquidity. All right. So my suspicion is that as long as 569 holds, this chart is going to be in pretty good shape, right? It's going to be in pretty good shape for dips being buy zones. If it loses that edge, that's a pretty big gap down to 565. I say we buy the dip as it comes into the prior 1 hour support formations, old resistance, new support, and when it breaks, we move down. Where's the target? 572, 573.25. If it breaks down below 569, we've got 568, very close by, and then the value area, 567 and 72 cents. I'm not sure the buyers are going to give the sellers any room to have significant dips. I think they're going to ram it down their throats by bouncing off of really tight formations that give us upward pressure. Just my gut, and I'll be wrong if we break down below the 1 hour low, right? The opening hour of low price action. Let's look at the daily on the Qs. It is the weakest of the bunch, but you can see, look at this. That's consolidation. That's inventory accumulation. And so they're going to try and distribute it into the next area of accumulation, just above, potentially into 504 is what I am seeing. But let me look at the weekly to see if I can tell. 496, 508. Yeah, 504 seems like maybe a little bit out of the way. This is old resistance, new support. That's 498. We're only at 480. And so there's plenty of upside pressure that could give us a run. My suspicion is this one's going to be a little weaker, but the pullbacks, look at those hourly charts. If it holds pullback of support of old resistance, it's going to be a move to the upside. And you can see that happening right here. As long as it gets above that opening candle formation, which I have no idea why I don't have that one. Let's clone this. Here's our opening range. The high is about 486. And the low, where is that? 485.43. Right? So that area near 485 is the floor there. You don't need to be long if it loses that zone at all. All right, that's it for me. Good luck trading today. I'll see everyone at the Benzinga midday Moneyball report. And until then, trade light. But it does appear that trend is up and a lot of shorts are going to get caught flat-footed. That being said, inventory is long pre-market, and so we normally have inventory correction, and that's going to be our dip opportunity to get involved. All right, everyone, take it easy. See you soon.